Well, hello there. This is Bruce at Fleet Capital Management. It's Friday afternoon, the 11th of February, 2023. We're going to take a look at the market. It's been a difficult week, difficult day, difficult week, but not terrible, especially as far as technical analysis goes. And I'm going to show you that. I don't think this will be a very long video today, which I'm sure you're cheering. But let's jump right in. We always have to say that this video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell the security. Please feel free to subscribe to this YouTube channel. If you have any questions, Bruce at fleetcapitalmanagement.com. Our website is fleetcapitalmanagement.com. Two buttons on the right. The first one will take you to our most recent market analysis videos. This one is used to hop on my schedule and schedule a video call, a Zoom call with me, so we can talk privately about your particulars. So let's jump over to a couple of computer screens. Bear with me. So this is the daily trend analysis that I update every day. It was updated today, of course. I think I said today was the 11th. Today is the 10th of February. Sorry about that. On our trade triggers, we have a green and a no trade zone, which we're seeing a little bit of yellow in here, which is pretty, it shows what this week was about. It was just sort of a neutral week and not a lot happened. We had a big up day, big down day, big up day, big down day. It was kind of a sideways week. Group 1 is still green. Group 2 is green and neutral. It has stayed neutral. This is the go, no go weekly chart. I really thought this was about to turn green, but with the price action we had this week, it's just remained in the neutral. But I'm still buying stocks for Group 2 because on the go, no go charts, the momentum is still pointing up and price generally follows momentum. As far as our moving averages, the 8-day moving average is still above the 21-day. The 21-day is above the 50. The 50 is above the 200. That is a full-on technical analysis bull market. So nothing really has changed there. If we go over here, and I'm going to take off a couple of things that are on this chart. This is the S&P 500. Don't worry, actually, let's see if I can take that off. Yeah, I took that off as well. We had kind of a difficult week. Each bar is one day. So Friday, Thursday, Wednesday, there's Monday right there. You know, we had a big up day on Tuesday, really big up day on Tuesday, and then the rest of the week has been down. But as you've seen me do before, I'm going to draw a Fibonacci retracement and just see how we're doing from this last swing low to the last swing high. That's how we draw it. Let me make that larger for you. And the three most critical areas, in my opinion, on Fibonacci retracement are the 0.382, which means it has retraced 38% of the total gain. The 0.618 or 61.8%, and then going back down to zero or 100% retracement of that most recent swing gain. Just to remind you, the 38.2 level, which is where we are, remember the tick to the right is the close, and that's the one that matters, not the open, but the close. Today we closed nicely above the 38.2, and even yesterday with that terrible down day, we closed above the 38.2. Both those days during the day we went below it. The reason I bring this up is if we start to respond from here, moving back up, that would be a classic bull market pullback. Remember, we can go up, we can go down, and we can go sideways. Those are our only three options with price. And I wouldn't be surprised. And in every bull market, we have bullish days or weeks, and we have pullbacks. I'm not going to say bearish anymore because they're not really, we're out of a bear market, but we always have pullbacks. And a pullback to the 38.2 level and responding off of it is actually a very bullish sign. So we'll see what happens next week. You know, we could close lower and we could go down to the 618. If we go down to the 618, that just shows me that the bull market's not as strong as I was hoping right now. And we could then respond. That would still be considered normal, but just less bullish than coming off of the 382. If we break below and close the 618, then I don't like what I'm seeing. And we're not in a bear market, but I don't like what I'm seeing. I would be seeing a lot of weakness in that. So that's the Fibonacci. Let me put my trends and indicators and pricing back on. Let's see where that is. Here it is. And since we're here, you can see that our entry into SPY was at $399.84 a share. We have a stop 3.75% below our entry, and the price is currently above our entry. So we're in a profitable position. I would like us to get back above that long-term trend line, which we have fallen below, but I think we'll be back above it soon. I certainly hope so. So if I go over to, let's see where I want to take you now. Let me just take you back over here for a second. Bear with me one sec here. Let's see here. There we go. And you can see, again, this is the S&P 500. This is a weekly chart. This is a daily chart. These colors are not go, no go. On this particular chart that I'm looking at something called Elder Impulse, just another way to monitor the market. Elder Impulse only has 3 colors. Green means that the price is above the 13-week moving average and momentum is gaining. Both of those things are happening, makes us green. A blue bar means one of those 2 things is not happening, but one is. So it's kind of a neutral bar. When we get to a red bar, that means that both the momentum is declining and we're below a 13-week moving average. Here we went back to blue, and that probably means momentum is coming back in there. So it's just another way for me to look at those types of things. If you look down here, I'm only showing the 50-day moving average and the 200-day moving average, and our cross has held, and hopefully that will just continue on. This marked the technical end of a bull market. Of course, price can do whatever price does, but we use these to give us a sense of where we are in the market. If I go back over to here, and I take a look at our ETFs, here's all the ETFs that we own, and then I use different types of stop management for different types of stocks. I think I covered that last week. It may have been a little confusing, but different stocks move in different ways and they require different stop management. But these are the current ETFs that we hold. We have some pretty big gains. We have some medium gains. This is just since the beginning of January. And we have a couple of small losses. XLE was actually our biggest price winner today. That had been down about 4%, and now it's down 0.32%. So that's just doing fine. So I'm not real worried about these. You're going to see that Bitcoin, for many accounts, not all accounts, it depends on when they bought Bitcoin, but Bitcoin was sold today for, I would say, the majority of accounts. And we sold Bitcoin. Let me go over to, let's see which computer that's going to be on. Once again, bear with me. I've got 3 different computers open. Let me go over to Bitcoin. And this is one of the things I want to talk about. So Bitcoin, we had a stop that was higher than our entry point, and it was up by almost 5%. We got stopped out right here with about a 5% gain. And that happened yesterday. And yesterday, Bitcoin continued to go lower, and today continued to go lower. So, you know, we got out with 5% gain. That's really good. Now, there are 3 investments that I'm going to probably be going in and out of quite a bit. And they are, let me go back over here and I'll show those to you. They are BITO, which is Bitcoin, ARKK, which we are in, but it has shown some weakness, and SOXX, which is purely an ETF of semiconductor stocks. And the reason semiconductor stocks, oh, first of all, let me back up and say, I think these 3 investments have huge gain potential, but they're extremely volatile. So when we go in, like when we went into Bitcoin, I move the stops up on these 3 investments as rapidly as I can, because I need to get the stop above our entry price, so that if we are stopped out, like for Bitcoin, we are stopped out at a gain. Why that's important is if we are stopped out at a gain, I can go back into it tomorrow. If we are stopped out at a loss, I have to wait 31 days, and that's for tax reasons. So these are three investments. I mean, Bitcoin, we made on a net basis, because we've been stopped out, we made 5% in a matter of a week or so, which is just a fabulous rate of return. And then I have other indicators that will help me gauge when is the right time to jump back in to Bitcoin. When has the downward momentum stopped and the upward momentum started? We will get right back into Bitcoin. ARK, we're still in ARK, but ARK has been showing some weakness the last few days. Let me see if I can move this and make that a little bit larger. Bear with me 1 second again. Don't know why that came up. Let's close that. Sorry about that. Wow, lots of stuff is opening up on the screen for some reason. Okay, let's do this. Make that a little bit bigger. You can see ARK had a fabulous run up, and then the momentum has been turning down. It's still sitting in its no trade zone. It's still above 3 ATR level, which I use as a potential stop. I'm not going to let it break below that. If it does, we're going to get out, and we'll get out with about a 5% gain, which is fine. That, you know, we've only been in it for about a week. 5% in a week is fabulous. Once again, we'll wait until the momentum turns, and once the momentum turns, we will then hop back in. And the same thing with semiconductors. I have not gone into this yet. And it has been on a nice little run, but it seems to be weakening a little bit. It's a little hard to see it here, but it has been weakening a little bit. I'm waiting for a better entry point. So these three investments, the stop management is very different than all of our normal ones in that I'm rushing to get the stop above the entry so that if we're stopped out, we're at a gain and we can go right back in. Hopefully that makes sense. I think it does. So that's why you don't see Bitcoin on the list. That's because we stopped out at a 5% gain. ARK, we have about a 6.39% gain right now. And again, we just went into it on the 17th of January, so it hasn't been very long. The Qs are doing fine. SPY is fine. Everything else looks really good. And our stop management seems to be working just fine. Here are the stocks that we are currently in. We have some really big winners in there. The only one, oh, actually, I did come out of a stock today. AMKR, and that one was at a loss. But again, we're going to have some losses, and we've got one more, Thor, which again, everything looked really good, especially the fundamentals and everything else, but we're down 7.62%. So I've got to stop in there. I don't want it to go much below 8%. 8 to 9% is kind of my realistic target. It's already in there. I hope we don't get stopped out, but if we do, we do, and we move on, and we keep weeding the portfolio of anything that shows weakness. We hold in the portfolio things that are showing strength, and we let our winners run as much as we possibly can. And like I said last week, every different style of investment that I use has its own particulars, is in risk management and in stop management, same thing. Just based on how the characteristics of those particular stocks work. And I can even show you in here, if I go to, this is one of the systems that I use. Let's see, that one, they're all 8. Let's go here. You can see these two have 8% trailing stops, and this one has a 3% trailing stop. This has a 3% trailing stop because, actually, I can show it to you. I'm keeping very strict notes of everything so that if you ever have a question, I can answer it. So here's Massey. Massey, our stop is 13.66% above our entry. And I added T-3 is a 3% trailing stop. So then the question is, well, why did I add that stop? Well, then I don't know if you can see this, but I added on the 9th, yesterday, a 3% trailing stop due to, number one, the TSI crossed down. This is another momentum gauge, and it crossed down. What we want to see is the blue above the red, and that shows us that momentum is growing. It did cross down, which gave me some pause. That's not the only reason I put a tight stop. The ATR is now in the no trade zone. Well, there was a second reason that I wanted to protect those profits. And a third reason is, if you can see over here, they are reporting their earnings on February 21st. So we've got about another week to go or 11 days to go. But for all of those reasons, I don't want to let a really healthy gain turn into a loss. We're not going to ever let that happen again. So that's why I put it in. Now, if we get stopped out, I don't know that we will, but if we get stopped out, we can always go back in. I would just wait until right after the earnings announcement to go back in if the technicals are right and if it looks like this is going to be a continuing winner of a stock. So every single position is treated individually as far as the type of stock management, how often we'll go in and out, if we will go back in. So I hope that makes sense, and it seems to be working well. The fine tuning I've been doing on our stock management already this year seems to be working well. We are capturing more profits. We won't allow a profit to go into a loss, but we also have to give it enough room to breathe so that the normal fluctuations, if this thing's going to just continue up to the moon, and very few stocks do, we have to give it enough room to breathe, enough room for its normal volatility, but we also have to protect our profits. So it's a very difficult balancing act. But the nice thing is, if we get stopped out and we're wrong, we can always go back in if we have a profit. So that's the story with that. I've shown you the three that'll be a little bit different. We've got some really good gains. I hope this market isn't turning south on us. I don't think it is, like I showed you. It looks like a normal retracement. Stocks go up, stocks go down in a stair-stepping pattern. Let me show you an addition. We added Yum Brands today. Let me show you why we added. This was interesting. Yum Brands, before it got onto my list, had a nice little run. Remember, stocks can go up, they can go down, and they can go sideways. Well, look at this. This is called a consolidation. This consolidation has been there for about 3 to 4 weeks. This is a beautiful consolidation. This is something that happens very normally after a strong run. And then with the consolidation, is it going to break to the upside and continue its bullish pattern, or is it going to break to the downside? We watch very closely for that. It looked yesterday like it broke to the upside, and then it settled back down. I bought it here today. I bought it at $131.32. It closed at $131.31, so it's basically break even. But here is our initial stop. Here's our initial profit target. Profit targets are not a line in the sand. We can just keep raising profit targets. I do that all the time. I don't lower stops. That is a line in the sand. So in any event, that's a new stock that we're working on, and we'll see how that performs for us. The fundamentals were fantastic. The technicals were fantastic. It looks like it's breaking up following a 3-week consolidation, which is fantastic. I mean, there's a lot of really good things in here. We'll see. We need to get above this line. That's a line of resistance. And I thought that was going to happen today, but it settled back just a little bit, a hair. So we need to get above that line of resistance for this thing to really start moving up. So in any event, not worried about the market, even though it was the first down week in a few weeks, a number of weeks. Everything looks normal to me from a technical perspective. And I think our stop management is working just fine. I think we're picking up profits along the way, nice ones, 5% in a few weeks is not bad. And we'll just keep riding this bull, and hopefully this thing is going to go as strong as I think it will for this year. But remember, there's also there's always a lot of, we call it the wall of worry. There's still the war in Ukraine coming up on a year, which is absolutely maddening, in my opinion. We've had those. We shot down another, we don't know what it was, but balloon surveillance object today. We don't know anything about it. We don't know if it was Chinese. We just don't know yet. But those things are on the horizon. That raises tensions with China, which is our #1 trading partner in the entire world. So there's always stuff going on, but how it affects both the psychology and the financials of the market, that's what shows up in the market prices, and that's why we use technical analysis. Let's see what the market is actually telling us, not what the news stations are telling us. Trust me, the market knows all available news and news that we don't even know. So that's why we use technical analysis, but I'm comfortable right now. Anyway, I'm going to let you go. I think that things are working out just fine, and we will hopefully have a better week next week. I will talk to you soon. If you have any questions at all, just shoot me an email. I'm always here. Bye-bye.